Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about stock symbol MMTLP. This story is coming to a close. There are only 6 to 8 days of trading left on the OTC markets. And for those of you who don't know what I'm talking about, we're talking about oil and gas assets that are currently trading under the stock symbol MMTLP, also known as the Series A preferred shares. They're expecting to spin out a company based on these oil and gas assets. We're talking about 3.2 billion barrels of oil in the ground and a bunch of natural gas. There's a 49% revenue interest in this. It's near El Paso, and there's a Marathon refinery in El Paso, Texas. You don't need a federal lease for this. This is called private land in Texas. So this is a pretty cool deal. But the story is coming to a close. If you want to know what the story is all about, I got 2 videos about that. Thoughts about oil, part 2 and part 3. They talk about the merging of these 2 companies called Torchlight Energy and Metamaterials, how these oil and gas assets were being spun out, and how the stock symbol MMTLP came into being, what Next Bridge Hydrocarbons is, how much are these assets worth. It's all in there. There's 2 videos that talk about it in detail. If you want to know a quicker overview of what to do, there's like a 1 year in review. You can check that out. It's only 24 minutes. There's also an FAQ for new investors. Again, this is going to be a very quick play for you guys if you're a new investor, because the story is coming to a close, but it is worth it to read the FAQ. There's a lot of misinformation out there, and the FAQ clarifies a lot of information. For instance, the number of shares is 165 million shares of MMTLP. That's all that there will ever be. A lot of people think that there's, a lot of websites state that there are 361 million shares of MMTLP. Well, that is the number of shares of Metamaterials, which is a parent company, not the number of shares of the spinout of MMTLP. Also, if you are brand new to this, you should know that if you have stop losses, those stop losses will be triggered. This is an active play by shorts. Right now, shorts are behind, and they will do whatever it takes to get you to sell your shares, including what's called a stop loss attack, which means they will naked sell a whole bunch of shares into the market, flooding the market, dropping the price, hitting your stop losses, and causing you to sell your shares. So when you sell your shares, that drops the price down even more. That's what a stop loss attack is. It's also called a waterfall attack. Anyway, that's what they do. So if you have stop losses, they will be triggered in this play. Finally, if you want to know about the filing process that's been going on with this spinout, which is going to be called Next Bridge Hydrocarbons, there's an S1 filing process, and I've got a whole bunch of videos about that. I'm not going to go over them in detail, but you do have to watch them in order because they are progressive. So check out the first video first, which is Next Bridge Hydrocarbons S1 filed, followed by I sense a great insecurity in the force, followed by the S1 amendment number 1, and then amendment number 2. Then you have amendment number 3, and finally amendment number 4, which is the last amendment. And after amendment number 4, you have what's called a 424B that's been filed, and that basically means that you are active and you are running. So let's talk about what's going on. Let's move on. So this is what's known as what is this? This is called iborrowdesk, and it tells you how much shares are available of various stocks, which can be loaned out. So you have recent data and shares available. And if you look and you see that on, if you look and you see that on 11/29, suddenly 300,000 shares became available, according to iborrowdesk. Previously, there were only 7,000 shares available to be loaned out, which means they're getting ready for a short attack. That got, that was all set, and then, come 11/29, that 300,000 shares suddenly became 9,000 shares, which means they commenced their short attack, or they did their short attack. They took the shares that they somehow scrounged up, they borrowed them, and then they flooded them into the market, lowering the price dramatically, right? That's what was going on there with short attacks. There have been some recent There have been some recent good Twitter spaces. This is the last one, which is very, very good. Unfortunately, I missed it. But it is available on YouTube, so there's a YouTube link on how to get there. So check that out. But here, I've got a clip of what John Berta is saying. John Berta is the former CEO of Torchlight Energy. He knows a lot about what's going on and behind the scenes, and here's what he has to say. Let's listen.
It's good. I mean, I think you guys are doing a great job, and I think I've said this once before that I would say 99% of the conversations you guys are having, you're right over the bullseye on things. There are certain things that I know that you probably don't know, but but nothing that I know is material enough that it's going to affect what you're doing. So. I think, just keep up the good work and keep doing what you're doing.
We appreciate you, John.
That's great to hear, John.
Thank you so much.
You're the man, John.
I appreciate it. I guess tell people you were under no obligation to help us or say anything, and I've appreciated everything that you said and done.
Well, the information or anything I've ever shared with you trust me, is not going to get me in trouble. So.
So that was John Berta speaking. He speaks at some Twitter Spaces, and it's worth it to check that one out. There's about a 40-minute YouTube video about it. So check it out. It's well worth listening to. And we're going to go to some tweets that he recently made. So he's been saying, and for those of you who think you can just hold the short and go to NextBridge and buy shares, think again. I believe the answer will be a resounding hell no, and here's your lawsuit. You skirted the system for years, no sympathy will be given. Reminder, just personal opinions. And he says, show me the money. That's from Jerry Maguire. Show me the money. So, what's going on? So, what he's talking about is the fact that there is 165 million shares of MMTLP out there. And if the shorts think they can just hold on to their short position after, all the trading has ceased and everything, and then suddenly try to buy those MMTLP shares or try to buy the NextBridge shares afterwards, and try to deliver them because they're supposed to be delivered as a dividend to the people who own MMTLP. If they attempt to buy NextBridge shares directly from NextBridge Hydrocarbons, he says, think again. The answer will be a resounding hell no, and here's your lawsuit. And part of the reason is that you have to know the people who are involved in this, right? You've got John McCabe. He's the former CEO of Torchlight Energy. Then you got you've got John Berta, who's the former CEO of Torchlight Energy. He can't stand the shorts. He's got a personal grudge against them. But even worse than John Berta, you got Greg McCabe, who's one of the biggest shareholders of Torchlight Energy, and he's been hounded by these shorts who have been attacking his company for years and years. So he knows how Greg McCabe feels about it, and it's personal for them. And here's another tweet that John Berta said: "He got a call from a reputable friend. Some funds still don't understand that they will not be able to trade MMTLP after the record date. They have no clue that the spinout takes all the value away from MMTLP. They assume that FINRA will just allow them to continue trading. But who would buy? Right? Who would buy?" And finally, we have this tweet over here, where it basically says, FINRA needs to approve and let NextBridge Hydrocarbons start its journey. Let the players sleep in the beds that they have made. Notice needs to be given, and the countdown needs to start. Enough already. You made your bed, you sleep in it. So let's go. So all of this is because, there was a theory that some guys had that, hey, look, these shorts, they'll be allowed to maintain their short position, or it'll be a ledger book entry afterwards, that they will owe NextBridge Hydrocarbons shares, which they cannot get from anywhere except NextBridge Hydrocarbons, and that they would come to NextBridge Hydrocarbons, hat in hand, and say, look, we'd like to buy some shares from you. We'll offer you this, such and such, and the theory these guys had is that NextBridge Hydrocarbons would have to sell to them. To which it's worth it to listen to this clip from that same Twitter Spaces. Let's hear what John Berta had to say at that time.
Did the Series A preferred, there's only 200 million shares of preferred authorized. So you can't change that designation with the state. So even if they wanted to buy shares of MMTLP for that would actually turn into NextBridge, you could only sell 35 million of them if that were ever to be the case. Secondly, it creates a taxable situation if we were to sell those shares before a merger happened. Okay, so I'm giving you guys some insight on this stuff right now. So let's say somebody came to us today and said, "Hey, I'll buy 35 million shares at $50 a share." Well, that becomes a taxable event to the spin out and basically destroys the whole spin out. It won't happen. It can't happen. So that would go out the window. And then lastly, let's just say that this thing plays out and the stock trades where it trades, and for example, it goes to $100 a share, and that's the last trade. And then all of a sudden, NextBridge gets a knock on the door from 5 brokerage houses saying, "I need to buy 50 million shares." Well, they have the ability to sell them shares at that point, but you have to remember who is involved in NextBridge and who is the largest shareholder of NextBridge.
Oh yeah,
that person being Greg McCabe. And trust me when I tell you this. Greg has a disdain for what we had to go through for the last 6-7 years that runs as deep or deeper than mine. And so, as I mentioned in my tweet today, not only would it be a hell no, but it's a hell no, and here's the lawsuit for all the fuckery you've caused us in the last 7 years. So
yeah, and I know, like, I'm not kidding. Like, Jared has told me nothing but good stuff about your team. I used to be in oil field, like the previous speaker.
Mm-hmm.
I was for.
Okay, we don't need to hear about that. But, okay, so George Palikaris also has some recent tweets today. Actually, they came out last night. And here are his tweets. He starts with, Today, Meta requested FINRA to halt MMTLP on December 14th at close, current distribution date, or to freeze trading on December 12th at close, current record date. Please take the time to read the S1. No public trading after the distribution date, i.e., that is, there is no ex-dividend date. After the dividend is done, it's done. There's nothing exists after the dividend. It will only be Next Bridge Hydrocarbons. Finally, there's a second add-on to this tweet. He says, link SEC Gov archives Edgar, where he links to the Next Bridge Hydrocarbons, and he says the Series A preferred stock of Meta will not be DTC eligible. The effective Form S1 registration statement discloses this. Upon distribution, the Series A preferred MMTLP will be canceled in accordance with the Certificate of Designation Section 3E. Furthermore, NextBridge Hydrocarbons will be an independent, quote-unquote, public reporting company only for the fiscal year 2022 under Section 15D. So you can expect a 10K and some other reports needed, but that's as far as it goes. NextBridge Hydrocarbons is not a public company. Hope this link helps. He gives a link to Investopedia where he talks about the SEC Form 15 and 15D. And this is followed up by a tweet over here. It says, winter is coming. Stay warm, everyone. And we all know what that means. Winter is coming. So, well, some people may not know what that means. This refers to... there's a saying in the Game of Thrones called winter is coming. Winter is basically Armageddon, when the White Walkers or the zombies come out and kill everybody. So winter is coming. Stay warm, right? So stay warm. Protect yourself from the zombies. And at the same time, torch the shorts. The shorts will be burning. To be crystal clear, NBH, Next Bridge Hydrocarbons, will not be a public company post the spinoff. It will be private, and under Section 15D of the new management, the filing under Section 15D, the new management will be filing public documents, for instance, the 10K, until fiscal year end, December 31st, 2022, which is coming up. Info available on the effective S1 filed. Please read. Okay, so There you go. Next Bridge Hydrocarbons will not be a public company. It will be private under Section 15D. Okay, here's a calendar because I like to look at calendars. Today is December 1st at the time I'm making this video. The date of record is the 12th. It's coming up. The date of distribution is the 14th. If we look, we see that the 14th is 2 days after the 12th. You can think of that as T plus 2. So trade plus 2, that means this is the last. If you want to get Next Bridge Hydrocarbons shares, you better have bought it by the 12th, and then it'll be distributed by the 14th. So, and it's better if you bought it before the 12th. So that's where all that comes from. So if we look at the number of trading days, right? Today is December 1st. It's in the evening. The trading day is done. It means you basically got 6 trading days, right? December 2nd and the 5th through the 9th. That's your 6 trading days. The last trading day is the date of record, December 12th. And on December 12th, that's when, if you haven't closed your positions, your broker is going to close for you. So you probably, if you were a short and you haven't closed your positions in MMTLP, then your broker will close for you if you were a short on the 12th, for sure. The brokers may close earlier based upon what their individual policies are. It's up to each individual broker, but they have till basically the 12th, right? At which point they will close for you, because trading will be halted. So trading is either going to freeze on the 12th or it's going to be halted on the 14th, right? According to the George Palacaros tweet. So you got one of those 2 days. Take the worst case scenario, the 12th, say it's trading is frozen. On the 12th, that means you can't trade. On the 13th, 14th, all the results are frozen. That means you got to get your trade in done by the 12th to actually, close your position, which means if you're a short, you need to buy to close. So basically shorts have 6 trading days, in which case they can choose to buy to close their short position. And if they do not choose to buy in those 6 trading days, that means the broker is going to do it for them on the 12th, right? And so far, we have seen that the shorts have not, I repeat, have not been closing to buy. So what does this mean when they don't close to buy? Let's just say that there are 280 million shares short. I don't know if there are or not. Let's just say there were. If they take the full 7 days to try to close their position, they could get by with about 40 million days, 40 million shares a day of trading. Of course, the fewer the number of days less, which means the longer they take to close, the longer it will take to actually, the longer they take to start closing their position, the fewer days they have left, which means the more shares they have to buy in fewer days. Okay, so for instance, if you have 6 days and you take all 6 days and you equally space it out, you gotta, be buying 47 million shares per day for 6 days. If you have 4 days, you gotta buy 70 million shares. If you have 1 day, you gotta buy all that 280 million shares in 1 day. That's a lot of shares. Okay, why do I say that's a lot of shares? Because if we look at the volume today, the volume is 1.739 million shares of trading volume today. Let's say it's just 2 million shares. If it was 2 million shares, you're looking at 20x today's volume, today's trading volume, if you're going to take 7 days to actually space it out. I don't think they are, because they seem not to be doing that. If, on the other hand, they do it all in 1 day, that's 140x today's trading volume. That's a lot of trades. That's a lot of trades, right? Are they going to wait till the last day? Who knows? But if we take a linear projection of that, right, that means that currently the price is $8 a share. If you do 20 times 8, you get $160. If you do 140 times 8, you get something around $1,120. And that's if the prices increase linearly with the amount of volume. We know this is nonlinear, so it's going to be probably higher than that. That's what we're looking at right now. So, so that's where we're at. What kind of price action did we see today? Today, it ended at $8.08, and it started out, we know in the last few days it was much higher. But we had 1, 2, 3. I say we had 4 short attacks. I think Paul T says we had 3, but I don't know. To me, it looks like we had 4. 2 short attacks in the morning earlier. each dropping the price down significantly. We had a price run up around 11 a.m. or so, but then they smashed the price down. That was a failed short attack. So some, short attacks don't necessarily have to succeed, but we had one, at least an attempted one. Then that one failed. The price kept going up after that. And then we had 2 successful short attacks after that. One with a large amount of volume, almost 150,000 shares or so. And you can see from the bottom graph, how much volume was involved in the actual short attacks. So these were the short attacks we had today. What does the last 5 days look like? Well, we had attacks today. We had attacks the day before, right? Previously, we were around 10. They controlled the price on the day before that, and they controlled the price the day before that as well, too. So the last 3 days before, they were basically just fighting to control the price and keep the price from exploding. And then later on, they said, hey, look, we got to attack now because otherwise it's going to be the end of the world for them. It's basically Ragnarok as far as they're concerned. Because, they got everything to lose, nothing to gain. There's no hope for them at this point. But anyway, the question comes up, you don't really care about the shorts themselves. You care about your shares in the brokerage houses, right? So with that, let's have a look at Fidelity. Now, we see this tweet from Terry. Thank you, Terry, for this info. This is very important. He says you can buy through the web now or through the app on Fidelity. It's okay. He tried it and he said, hey, he bought a share. It worked. It filled. Looks good. So I tried it too. I said, what the hell? Might as well. So I bought some more MMTLP today. It worked for me. So the buys are very quick. It's easy. Previously, you had to be on the phone and you had to wait to get through to the, fixed income desk and all that. You don't got to do that anymore. It works. It is working. You can place the orders to buy and sell on the web app. It's very quick and it gets the job done. So so what does that mean? Well, we know that it's very quick to place. It's very quick and easy now to place the orders. We know that shorts have helped drive down prices with naked selling, and we know that they have limited amount of time because the situation is going private soon, right? That's why I said TikTok, diamond hands, rocket to the moon and beyond. So what's really interesting is that currently Fidelity has some sell order limits at about 5x the current price. And that's the max you can go. You can't go beyond that. So I was curious about that. Because it's possible we could have what's called a short squeeze, and if that were to happen, the price could go up significantly more than 5x. So I called up Fidelity and I said, hey, look, this 5x limit on the max price is kind of annoying. Is there anything you can do for me? I've been a client of yours for a while and I have a fair amount of funds in there. And they said, well, let me see what we can do. And sure enough, there's nothing they can do. But they gave me a very good reason. They said that we can't really do anything because when we place an order on the order books, they don't allow us to place an order that's greater than 5x the max price. And the reason for that is it clutters up their order book, they said. So no one can do. So according to Fidelity, the idea is that nobody can do that. So does that mean that if you're at another firm which allows you to place an order that's much greater than 5x the current price, does that mean that brokerage firm is actually holding the order back for themselves and then later on pushing the order through, when it gets closer to 5x the current price? It could be. Computers can do that. They might have set up their system to do that. But according to Fidelity, the idea is that the actual order book itself out there does not allow for greater than 5x the current price. So that was quite interesting. Anyway, so back to the calendar, because I was thinking about calendar. So we have we have these 6 trading days, possibly, and on the last trading day, or the last trade day is the 12th, is what I'm thinking. So, there's a certain amount of time that was given. But George made a request to FINRA to do this action on the 14th and the 12th. And it's the first right now. So, is it, did he not give it, has FINRA not had enough time to look at this? I don't think so. Because what happened was that the 424B was released on the 23rd after the close of day, after trading. So Basically, the SEC released it on their Edgar website on the 25th because the 24th was Thanksgiving. And the 25th was a half day, right? So brokers and, FINRA and, whatnot have all had a chance to read the stuff over and understand what's going on. However, I believe they're going to say, well, we didn't know what's going on. There's thousands and thousands of companies out there, and, you got to tell us what's going on. So just to be clear, George, actually told them, hey, look, I'm putting forth a request to FINRA to actually freeze the trading on the 12th, or to close, and to cease all trading, close all trades on the 14th, right? So no trading after the 14th. He's given them a heads up. This is done, I believe, formally in writing, so he's actually contacted them, and they should be aware of this right now. So FINRA, by delaying, they're actually making the case worse for short hedge funds by delaying, right? Because they have fewer days, which means more shares have to be bought in fewer days, which means the prices go up significantly more, right? So by having a large number of days and by being able to spread out those buys over a large number of days, you can keep the price action from, it's still going to be insane, but it won't be as bad. Let's put it this way, right? So that leads to the point that chances are, if you hang through this, there may be a lot of newly minted millionaires as a result of this one particular trade. And it is quite possible, right? So with your broker, it's good to know what kind of insurance they have. Well, this is the Fidelity website. This is the section they call safeguarding your accounts. It says they have FDIC insurance, and that's the kind of stuff banks generally have. And it's good for up to $250,000 per account. Well, if you're a millionaire, $250,000 ain't going to cut it. Sorry. It won't. So what about SIPC? SIPC is additional coverage. That's a Securities Investor Protection Corporation, nonprofit, and they will cover up to $500,000 in securities, including a $250,000 limit for cash held in a brokerage account. Well, that's all very well and nice, but if you're going to be a millionaire, $500,000 ain't going to cut it, and $250K for cash ain't going to cut it either. So, you might feel, you might feel a bit, you might be feeling a bit exposed here. Well, it turns out that what they have is this thing called excess of SIPC coverage, okay? And that is for $1 billion. Now, the wording is kind of interesting. They say total aggregate excess of SIPC coverage available through Fidelity's excess of SIPC policy is $1 billion. So, I said, is that $1 billion in total for all of Fidelity and all of their millions of clients? That wouldn't be very much money. So where is that? What is this $1 billion? Oh, there's also a limit of $1.9 million coverage on cash awaiting investment. That certainly can't be for all of Fidelity's clients. If we look at Fidelity, they have $3.6 trillion of assets under management, right? Their equity assets, meaning their stocks alone, are almost $2 trillion, right? High income assets are $75 billion. $1 billion ain't going to cut that. So I called up Fidelity and asked them, what's this $1 billion policy for? Is it per account? Is it per client? And the answer I got over the phone is yes, it is per client. So you will be protected. If you're over $1 billion, you got other problems. So I wouldn't know what those problems are. So that's beyond my pay grade to figure out. Anyway, so according to Fidelity, you'll be protected for up to $1 billion. So if anything goes wrong, no matter what, your assets are protected here. I would check to make sure your broker has excess of SIPC coverage and make sure it's out to the same level of quality as Fidelity. Hopefully it would be. And I think all the big brokerages are similar, and I think that, they have trillions of dollars of assets. And so as a result, they should be okay in making sure you get paid, which is really what's important. Which leads me to this final slide, which has a lot of stuff in it. Okay. You might want to take a screenshot of this or whatever, but this is what I believe. I believe MMTLP is a big deal. It could be life-changing for a lot of people. Could make a lot of millionaires. But I don't believe it's so big that it would bring down the U.S. economy, right? The oil and gas assets alone, they have an intrinsic value that we calculated earlier of about $10 billion intrinsic value, which works out to about $60 per share, okay? Under a squeeze situation, you might get 5x to 15x that amount, right? So let's say you go to $300 to $1,000 per share of value, right? That's $50 billion to $150 billion under a squeeze situation, right? Now, if there's a bunch of naked shorting that's going on, it's 2x to 5x that, let's just say, that could drive it up to, say, a $100 billion problem to a $750 billion problem. It's getting to be a big problem, right? Getting to be a big problem. But that's the worst possible case scenario. Is this likely to take out smaller hedge funds? Of course, yes. Might it take out smaller brokerages? Yes. But we just saw that Fidelity alone has $3 trillion of assets under management. They're just one broker. There are many, many big brokers out there. So I believe that MMTLP is not a similar situation in this respect to GameStop or AMC or the AMC Ape shares. So this is not the same level of a problem. This is a much smaller problem, okay? And because it's a much smaller problem, there should be no need whatsoever to suspend or break any rules to prevent MMTLP from going forward, okay? Now, what does it mean if they did break rules to prevent MMTLP going forward? That's very, very problematic. And the reason is because if they broke the rules for a tiny problem like MMTLP, that implies that the entire system is really fragile. And it's not just you and me that's looking at this, who are thinking, hey, $1 million is nice. It'd be nice to make $1 million. There are people out there with billions of dollars. If they see that the entire system can come down based upon this one tiny $10 billion problem, or one tiny, at worst, $750 billion problem that's not taken care of. I mean, first off, it shouldn't be a $750 billion problem. They'll view it as a $10 billion problem. And if they think a $10 billion problem can take down the entire system, and they have billions of dollars in assets that are in the system, they're going to take those assets out. And nobody wants to scare those guys into removing their assets from the system. Because when they take out their billions of dollars, that's when the whole system crashes. Okay? So you should not break the rules in order to solve a tiny problem, tiny, minuscule problem like MMTLP. Because then the big boys will start to get nervous. Because if you're breaking the rules for this pesky little ant that should not affect anything in the world, then you've got to, you must be breaking the rules for a reason. And that reason must be that the entire system must be on the verge of collapse. In which case, if you got billions of dollars invested in the system, you're taking that money out. And you're going elsewhere with it. And you don't want people to do that. You don't want people to do that. In either case, do I think that I said before the story is coming to a close. Does the story have to come to a close for you and me? Well, there's this theory called the double squeeze, Suppose people took their profits from MMTLP and reinvested back into the parent company, Metamaterials, MMAT. What would happen? Currently, the parent company, I think, has something like a $750 million valuation. It's tiny. And if billions of dollars started going into that, you think that could cause MMAT to increase in price substantially? Possibly. That's a double squeeze theory. There's a video on that. Links will be provided, of course. And with that, I have to say that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is December 1st, 2022. This is a story of MMTLP. My name is Tony. This is the Market Moves channel. I will talk to you later, and I hope you have a good weekend. Goodbye.